I want to show you the modern American trap. A state that looks perfect on Instagram, has a strong economy, and still makes normal life feel like you're paying rent to breathe. And the craziest part? When people try to escape, they're creating a traffic jam of migration. Prices and rent spikes ripple outward, and suddenly the backup plan isn't affordable either. This is a list of 10 states where the cost of living pressure is reaching a tipping point. The goal isn't to doom scroll. It's to expose the rules of the game so you stop blaming yourself. Before we move on, please take a moment to subscribe to the channel and like the video. Number 1, California. California sells you the idea that a bigger paycheck fixes everything, then quietly charges you for the privilege of existing. Yes, the economy is real. Tech, entertainment, ports, biotech, endless "we're hiring" energy. So you come for the salary bump, the resume glow, the weather tax you pretend isn't a tax. But here's the catch. Housing keeps sprinting while your raise jogs. Then the everyday stuff stacks up. Insurance, utilities, childcare, like subscriptions you didn't click cancel on. So, you adapt. You stay pinned near job clusters, squeeze into smaller units, or move farther out and pay with commute hours. Bay Area and LA starter homes feel like investor bait. Rentals turn into bidding games, and shiny micro units don't fit families. Your income becomes a treadmill. Number 2, New York. New York is where you can have a career, culture, and a subway, and still live like you're one surprise expense away from moving back home. The opportunities are non-stop. Finance, media, tech, healthcare, and NYC keeps pulling people in like a magnet with a credit card reader. But here's the catch. It's basically 2 New Yorks. One is rent-stabilized or locked in, legacy housing. The other is everyone else fighting over a shrinking pile of normal apartments. That's how you get roommates into your 30s, rental bidding wars, and commutes that feel like a part-time job. Add childcare, about $20,000 a year for an infant in 2023, and savings evaporate. And building moves slow. Zoning, reviews, approvals. Every delay shows up in your rent again. Number 3, Florida. Florida used to be the escape hatch. Now it's the place where your mortgage is fine. And then your insurance shows up with a flamethrower. No state income tax, warm weather, I'll work remote by the water dreams. People moved fast, prices followed, and everyone acted like they'd hacked life. But here's the catch. The real hit is the shadow rent. Home insurance, flood coverage, HOA fees, and property taxes that reset when values jump. It's like buying a phone on a deal, then getting billed for the charger, the case, and the updates. Owners get surprise condo assessments. Renters get renewal hikes to cover it. And when houses turn into mini hotels, neighborhoods stop feeling permanent. Number 4, Illinois. Illinois is the one people don't expect on this list because the Zillow screenshot sometimes looks reasonable, until you add up what it costs to stay. On paper, it should work. You get a major city, serious hospitals and universities, corporate jobs, and neighborhoods with actual sidewalks, all priced below the coastal chaos. But here's the catch. Property taxes, local fees, and old obligations hit you every year, while wage growth doesn't always match. People move in, people move out, and the middle gets squeezed. You can buy, sure, but the carrying costs act like permanent rent. And families end up hopping neighborhoods for schools and commutes. Number 5, Oregon. Oregon has the vibes, coffee, trees, walkable neighborhoods. But the bill for the vibes has been climbing, and it's not optional. Portland sells a whole lifestyle brand. Access to nature, cool shops, creative jobs, and that tech spillover that keeps demand turned up even when the news gets weird. But here's the catch. Building stays tight while people keep arriving, so quirky housing turns into scarce housing. Renters compete hard, buyers chase thin inventory, and starter homes become snack-sized targets for investors. Families feel it first. New construction skews small, Many neighborhoods fight change, and you get pricey options that don't fit real life. It's like paying premium for basic. Number 6. Washington. Washington looks like the promised land. High-paying jobs, no state income tax, mountains in the background. So why does normal life feel like a subscription you can't afford? Seattle, Bellevue, Redmond. Those job clusters don't stop mattering just because the headlines say layoffs. The machine keeps humming, and demand stays sticky because the next team, the next contract, the next "we're back in office" memo always shows up. But here's the catch. Tech wages set the menu price for everybody. Teachers, nurses, baristas. Suddenly you're paying tech-adjacent rent with normal-adjacent income. Homeowners ride appreciation. Renters fund it. Small landlords scoop the spread with condos, ADUs, and single-family rentals. Then you get hit with childcare, traffic, and time. Proximity is the product. Number 7, Colorado. Colorado is where you move for fresh air and end up paying a monthly fee for the right to exist near a Whole Foods. Denver and Boulder keep pulling people in with job growth, startup energy, and that laptop plus mountains lifestyle. Remote workers show up, and suddenly everybody wants the same zip codes. But here's the catch. The housing market stays tight, and the buildable land in the key corridors isn't endless. So when prices jump, it doesn't feel like a swing. It feels like a new floor. That's how towns get hollowed out. Service workers slide to exurbs, rentals flip to short-term, schools lose families, and your cheaper place costs you in commute time. Number 8, Nevada. Nevada is what happens when the escape route becomes the destination. It's the backup plan state that started charging main character prices. For years, Vegas and Reno looked like the clean fix. Lower taxes, newer suburbs, and housing that didn't require a tech salary. So people kept landing, and the demand didn't politely wait. But here's the catch. That wave hits like freeway spillover. Rents climb, home prices jump, locals get outbid, and the new normal locks in before paychecks move. And a lot of the job growth sits in hospitality and logistics, not endless high-wage ladders. Then investors show up. Single-family rentals, build-to-rent, corporate owners, and housing stops being for you. Number 9, New Jersey. New Jersey is the state where you pay luxury prices for proximity. Not a mansion. Proximity. The pitch sounds solid. Commute access to New York City or Philly. A lot of towns with strong schools, and little pockets of shore life when you want to pretend it's a beach state. But here's the catch. High property taxes plus high home prices plus tight inventory turns good schools into a gated market. If you rent, the scramble gets worse near train lines because multifamily stock is limited. Then comes the commuter toll booth. Train passes, tolls, parking, and lost hours. Down the shore, seasonal demand lifts prices past local paychecks and year-round staffing breaks. Number 10, Hawaii. Hawaii is the cleanest example of the golden cage. People don't just get priced out, they get priced off the map. It's islands, not suburbs. Land is finite, a ton of goods get shipped in, and the economy leans hard on tourism, so housing supply never gets to breathe. But here's the catch. Rent runs high, listings stay thin, and overcrowding becomes normal. You'll see grown adults sharing rooms, families doubling up, and still watching paychecks disappear because plenty of jobs don't scale with island prices. Then investors and second homeowners soak up units for part-time use or short stays. Neighborhoods lose young families, schools shrink, and the culture starts feeling like it's for visitors first. So here's the thing. This isn't random bad leadership in a few places. It's a setup where property values climb faster than paychecks, and the gap gets billed to renters, first-time buyers, and anyone trying to raise kids without inheriting a house. Moving used to be the fix. Now the migration traffic jam just drags the same math to the next state, then the next. The real fight is housing supply, the rules that block it, and who new homes are actually built for. Would you rather live in the golden cage or leave the game? Comment build or bail. And tell me which state is pushing you out.